GM. So we have a huge week gearing up on Bitcoin and wider markets. Bitcoin is currently squeezing shorts. It's got above 70k this morning, and I really want to dive into this with you guys today. Because for the last couple videos, I've been telling you guys how Bitcoin from all-time high is down 52% to the recent low. So, with all of these risk off macro fears, Bitcoin was not the asset to go short on if you were trying to express a bearish bias. And if we're seeing markets start to fade this war and therefore go risk on, because remember, time is never a bear's friend, every short has a liquidation price. Whereas if you're buying spot Bitcoin and you put it in your wallet, there's no liquidation price. It's not the opposite of going long, going short. It's very different dynamics. Time is never a bear's friend. So when it comes to Bitcoin, all of those shorts, I think, are definitely misplaced and expressing their bias on the wrong asset, which is part of the reason why you see Bitcoin squeezing up today. And you've seen it hold this imbalance zone on the daily that I've been talking about for really months now. It's now holding above 70k, and you can see it's really struggled to push down. Every time Bitcoin's pushed down, it gets bought up. Pushes down, gets bought up. And it's having a much easier time rising and going to the upside. So subtle signs there you're seeing from all of these higher lows that have been building on BTC, especially with the fact that it's been building those higher lows at the same time when stocks have actually been building lower lows. You can see in the bottom left and top right, S&P and Nasdaq have actually been downtrending while Bitcoin has been uptrending on low time frames. And again, reason for that is extremely simple. It's the fact that when you look at the Nasdaq, it's not down 52% from all-time high. In fact, it's consolidating at the all-time high. So if you were going to have a bearish bias on this war, you'd be looking at assets which have overly long positioning, not Bitcoin, which is clearly overly short and longs have already been wrecked. So in the school, made a couple posts that I'd like to share with you guys. Talked about how you've had 5 or more red monthly candles on Bitcoin in a row. Last time we had that was 2018. Historically, that has led to the beginning of the bottoming formation. It's no time to be a bear, 52% down from all-time high. And sentiment-wise, for the past few months, it's been it's so over. It's so over every single where. Bitcoin's done. We're going to 30k. We're going to 20k. So it feels like a we're so back rally is definitely on the cards in the coming weeks and months. Said this yesterday, and now we're starting to see the signs of that play out. Because remember last week when you had everyone saying Bitcoin was being suppressed by Jane Street at 10 a.m. every day, even though that would be suicide for them because every other market maker would eat them up. And that conspiracy theory got running. It got a bunch of legs, got a bunch of clicks, and Bitcoin closed a week red. So it's only really been sentiment that stopped Bitcoin so far, rallying up into the 80s, in my opinion. So that's why I think this week's a huge week. With all the war escalation, time's not a bear's friend. Anyone who's short, hedging, especially on Bitcoin, is at huge squeeze risk. So we really need to see now, can we accept and hold above 70k? And this morning, before we broke above 70k, as you can see, was at 69k here. I said that since we've rejected 70k multiple times, I think Bitcoin is set to break above 70 here, given the relative strength that I talked about. And I said if stocks can hold their weekly low, then a move up to the 72.3k liquidity should come next. And from there, if the squeeze is fuel, daily 50 EMA at 74.5k becomes a target. Key is breaking and holding above 70k. And well, since that post I made in the school, Bitcoin has, of course, broke above 70k with a strong close, with high volume, high impulse. It hasn't yet reached this liquidity over here, which is the high of this recent consolidation that we've been. I think that's the overall target. If we actually leave that liquidity, it's better to then look for dip buys. And for me, what I'm looking for is any dips into this M15 high impulse candle. I'll be watching to see if there's signs of Bitcoin bottoming out here to potentially trigger a long setup just to this liquidity. And if we can really consolidate and hold above that liquidity, then I think we can pretty easily rally to this daily 50 EMA, which is around 74K, in between 74 and 74.5K, depending on how long it takes, as that EMA band is, of course, always moving. So obviously we've moved up in the morning session with a nice move, strong move on BTC here. If we lose this gap and we actually start trading below 70K, then I think this is much more inclined to all roll over again, the same way this previous gap rolled over, and even the same way we had this first leg roll over and fill in. So I think 70K is your line in the sand here in Bitcoin. Hedges have had to close and unwind above 70K, so we shouldn't really give them a chance to unwind at 70K again on a retest, in my opinion. This should have strength. This should have legs to go on to at least 72.3K liquidity before going below 70. So that's the bet, because we've had plenty of consolidation, as you can see. We bump this back up to the 1 hour. All of this is weeks and weeks of beautiful consolidation. We've got a nice block of consolidation there. Also extends to this entire high and higher low block over here, and also extends to everything we've been doing for the past couple months. It's all been consolidation. So, losing 70K today would confirm for me that bulls still don't have the strength, and sellers have showed up in such force that this is likely going to set up a trap, and you probably see further risk off in wider markets as well, probably more war escalations. But given Bitcoin's held Friday's close, so the pre-war level, rallied up, held March's open, couldn't lose it, swept it on the New York session, rallied up, now is breaking 70K after rejecting it multiple times. Remember, resistance gets weaker the more you test it, because more shorts build up, more shorts build up, more shorts build up. And eventually, shorts aren't going to get the same exact entry and be able to print every single time. It becomes consensus. And if it becomes consensus resistance, that's when it's most likely to break, because that's the least expected scenario. So that's why I don't think we should come back and go below 70K. I think we should hold this gap, even if it's just for today, up to this liquidity, and then maybe we do top out, and maybe we do have to come back and retest some of this lower end of the range again in this sort of scenario over here, and we get more chop to come. Or who knows, if we do show some more strength, potentially can hit some higher targets like this daily 50. So that's what I'm looking at. Bitcoin, best place to express any long scalps, because it's clearly having strength compared to stocks, compared to gold, in relation to all of these war fears. It's trading higher than it was before the war. All the subtle signs you need, and that's why we're looking for longs on BTC. Asset selection is everything, guys. You need to find the best asset to express your bias on, and that can allow you to really perform the best. It can be the difference between a winner and a loser. It's just having the right asset selection, not longing altcoins before they're ready, not longing stocks over Bitcoin when Bitcoin's showing that clear relative strength, and it's building these clear higher highs and higher lows, while stocks are building lower lows and lower highs, downtrending. So BTC shaping up pretty nicely here. And taking that zoomed out view, we are now angling upwards, getting above those daily 12 and 21 bands. So that's what I'll be looking at. Now, caveat to that is, remember guys, we are still in a weekly downtrend. So, I don't think bulls back on, and I think that's where people are going to mess up. If you come back up over here, you're almost certainly going to meet resistance. You're going to meet sellers if we get into the 70s, into the 80s. That's where people will say, okay, I've been wrecked this cycle, time to exit on this bounce. And then you can come back for a retest, and it can all be part of the bottoming formation, and it can look something like this. But everyone will get too bullish on the first squeeze. They say, oh my God, we're so back. I mean, again, as I said, just remember the other week where we closed red and everyone was saying Jane Street was suppressing price. That's how crazy sentiment is getting right now. So imagine sentiment when we get up to 80. You're likely going to see some selling come in if we do go for that squeeze scenario. And you have seen these weekly bands rejecting. So that is the place to look for sellers to show up. You're not looking for this to just go to the moon. And that's what everyone on Twitter is going to be calling for, by the way, if we do start rallying up. It's going to be Bitcoin's going back to the moon. You're a loser. You should have bought. Ha ha. Everyone making fun of you. And that's why markets go for retests so often. That's why you always see retest after retest after retest. in all these scenarios, retest, retest, retest. Because of that exact psychology right there is why you don't get V reversals. Because V reversals feed into everyone's FOMO, and FOMO 9 times out of 10 doesn't win. Sometimes it does. Sometimes you get V reversals, but often you have to have a catalyst like we did over here when you have something like the Fed coming out with stealth QE. They came out with stealth QE exactly there, and you had your V reversal. That's your one time really on Bitcoin. You've seen a V reversal in recent years. Otherwise, you always have retests. So longs are the play on low time frame on BTC. That's what I'm looking at. Altcoins, you still got to be patient with them. Longs, I wouldn't say are the play yet because they're not breaking out of their respective consolidations, whereas Bitcoin is. So total free here gives you the gauge. Got to remember, guys, Bitcoin's like over here, equivalent, whereas altcoins are down here. And it's after Bitcoin runs that altcoins will then have their time to shine. Once Bitcoin's had its leg one and going into its leg two, maybe leg three, this is when altcoins will then take over and then have their sharp rallies. But again, asset selection's everything, guys. You've got to be patient and know what's optimal to long at certain times. So your wider altcoin market, this is your index, is showing that it's not the time for alt longs yet. Now, don't get me wrong. Are there going to be individual names that are showing some interest? Let's take a look at a few that we've been keeping an eye on over the past few weeks. Hype, still consolidating. It's not formed the next high yet, but potentially we're forming a high low. So best case scenario would be higher lows in here, and you start closing and holding above the 2024 all-time high. I think that sets up longs to $50 if you see that next high over here and consolidation above resistance. But of course, you're also at risk of this just rolling over and needing to continue consolidating for more time, which is also perfectly fine. So that's why we need to wait for the show of strength first on Bitcoin, and that's going to then lead to show of strengths on altcoins being likely as money rotates, because they are very oversold and they are probably due a rally, especially if markets are going to line up and we can see some risk on. So that's hype. 2024 all-time high pivot level, that's the key level. It's where we've rejected previously multiple times. Used to hold it as support, so it's a clear SR level there to flip and hold above if longs are going to be played in the short term, but again, not guaranteed. That's why you don't want to get long preemptively, because you could be just in for more chop like that. Now, VVV was one I've been looking at. Pretty interesting. It had a nice daily close. So 3 days of green days. Now we're starting to see this correction pullback, which is needed. Haven't yet hit the liquidity target, which is also a good thing, because generally once liquidity gets hit, that's when you're more likely to top out. But if you still got a target above, it's more incentive for bulls to bid it up. So still think Bitcoin's going to make the first move. So not made any trades on this yet. But if you do see price failing to go lower on something like the 4 hour and building a base, something like this, I'd be inclined to then look for longs on the breaker structure and trade this up on low time frame. So I'm just going to watch this and let's see how it cooks up. Obviously, you've had clear exhaustion here, real bleed downwards, retracing a lot of the moves. So I think it needs to have a bit of building and a bit of structure on the low time frames to then feed that back into the high time frames for long setup. So that's what I'll be looking at, because you're also at risk of this just rolling over and going on a deeper correction. So that's why I'll be waiting for low time frame reversals on that. Otherwise, that's the altcoin market. Now, are we going to be risk on? Are we going to be risk off? Obviously, stocks been much weaker. They're still below their Friday close, whereas Bitcoin's soaring way above it. VIX, this is the main one to watch. On the 1 hour, it has been building higher highs and higher lows, so above Friday's close still, which does indicate that risk off sentiment is still there. And what we've really seen is oil remains elevated. The US have come out and said that their Navy is going to be escorting ships through the Strait of Hormuz, which should lead to oil prices coming down, as it gives more confidence that supply is not going to be so restricted if you're still going to get those oil tankers through. And if that's the case, that means inflation's likely to be coming down, or at least a perception of it from the markets. Remember, markets are forward looking, they price in the future. So that's all that matters at the end of the day. If oil then comes down, that reduces that stagflation narrative that I've been talking about, which is risk off for your stock market. So you want to see oil come down. That's going to allow risk on flows, which also benefits Bitcoin, as we know. And if you do see it come down, I'd be watching this low over here. I think falling below 71.65 is when momentum's really starting to end on this oil move. But as long as we're holding this kind of 1 hour EMA band, there's potential for this to move to new highs. And that means everyone's fading the US intervention and they're actually betting on oil going higher, inflation higher, feeds into stagflation narrative. That's going to make people more hawkish with the Fed. You're going to see yields on 10-year bonds rise as people demand a higher return on holding US debt because they think the Fed are more likely to be hawkish because they got less area, less space to move in terms of easing monetary policy if inflation's high, because they can't cut rates, can't ease, can't do QE if inflation's high, because they're going to make inflation even worse. Inflation needs to be coming down, and oil's a big driver of inflation as it is what leads to pretty much everything we use in the world, and it's a big driver of energy, of course. So you want to see energy and oil come down to reduce inflation, reduce that stagflation narrative for risk on. But if we're going to be risk off, then you're going to see oil hold this and make new highs. And probably that will lead to more downside, especially in the US stock market. Dollar has lost momentum and had a close below the H1 bands and are now red. So unless it can hold this H150, if this starts to roll over, that can definitely produce some more risk on flows. Gold having a little reaction up now, but still below that Friday's close. Still a bearish reaction on gold. So you've had your clear market structure break over here. It's in a range. It's come back to resistance, and this is the clearest example of positioning, guys. Gold typically is bullish when you have escalations with war, as that's the asset people flee to in times of uncertainty. But markets move based on cause and effect, positioning. The reason Bitcoin's rallying more is not because Bitcoin's all of a sudden the war hedge and gold isn't. No, it's because Bitcoin was down 52% and positioning favored upside because longs were wrecked. Whereas gold has been literally up only for the last 3 years, up only, so everyone's long. And it's coming back into resistance. So that's what makes it more likely to hold as resistance because it's got less upside in it when everyone's already long. Who's left to buy and push price higher? Doesn't mean gold can't go higher, but that's what I'm saying. You've got to choose your assets where best to express certain biases in certain trades. So Bitcoin's been the place to express that long. Let's see how high shorts can get squeezed for. So that's the market update. I'll see you guys in the next one. If you enjoyed that, make sure to smash a like, smash a comment, smash a subscribe. I appreciate all of you supporting the channel, and I'll see you guys in the next one. GM.